Okay, I do hope that is a little bit better. Hello and welcome to the live trade room. Apologies for that. There is some setting on here that seems to default back to choosing a different microphone. I assume, of course, you failed to hear our brief introduction, but what we're looking to do in this session is to trade the European Open, the US Open, should I say, where we look for high probability trading opportunities across some of the world's largest markets, from your foreign exchange to commodities, and also the global indices markets as well. And we'll discuss the whole approach that we adopt when we get into these trades, and what we look for and how we determine as high probability trades. We'll show you that in obviously real time, and hopefully we'll be able to execute some trades as well. Please see our risk warning currently up on screen. It's important to be mindful of the risks involved in trading these financial markets. It is from these risks is what effectively allows us to be consistently profitable. So we do have a comprehensive approach to risk management. It is a fundamental part of trading these financial markets. If you don't control your capital to the downside, you will struggle to be consistently profitable. Okay, so without further ado then, the first thing we do when we hit our trading desks is to just be mindful of some of the major news events that are likely to impact our trading decision-making skills. Yeah, really sorry about that, guys. It looks like everything is back now. We have this strange default with our microphones, and it keeps switching to the wrong one. So I guess we need to look into that, see why that's happening. Delighted for you to join us. So what we do today is, you can see currently up on screen, today is Thursday, the 25th of February, and we just want to be mindful of any major news events. Now, we've had Fed Chair Jerome Powell over the last couple of days testifying, where he was effectively grilled and testifying before the House Financial Services Committee. Now, he adopted and the reason why this is important, the US from a finance perspective, is let's say the trailblazer in these financial markets, and many other central banks follow suit from the Fed, especially in your G7 nations, that's for sure. And he adopted a very dovish kind of approach to these markets, not too concerned about increasing asset prices. They understand that as a consequence of some of their decisions that they've made on the monetary policy side, with rates being so low and being very accommodative in terms of quantitative easing. So he adopted that same sort of approach, really, and rhetoric, not looking to increase rates for quite some time. But we have this sort of strange dynamic going on in the background, and the markets are not so convinced. And we'll have a look at the charts now in just a second, but we have increasing yields. So if you can get a little bit more return through the bond markets, then you can see some capital moving towards them. In this sort of inflationary type environment. Of course, as things currently stand with COVID, a lot of economies are in some form of shutdown right now. That will begin to hopefully change now over the coming days and weeks. And months even. So we'll start turning a corner. It is anticipated, certainly with the success of the vaccines. There was a lot of concern over the last number of weeks. What are the efficacy rates of these vaccines in real time? And we're getting really good news out of the UK, really good news out of Israel. So it's looking really positive in terms of being able to start to open up economies and get back to some form of normality, which is something that we all want to try and achieve. So how has this impacted the markets? That's really the fundamental question. And the markets are not so sure that Jerome Powell's sort of dovish approach is is likely to be that effective moving into the future. Now, it's very, very early days. You would have expected a real sort of bullish move in the equity markets, and we failed to see that. So just while I'm just talking about this risk on market condition, you can see the state of affairs. If I just zoom in a little bit more, and so we saw a very significant turnaround from the 3-day low off the back of Jerome Powell on Tuesday. So we saw a massive pivot. So there was some significant optimism start to kick in after a bit of a flush to the downside. And then yesterday we got the continuation trade. We were looking at this market above the 3,900, and we got a nice move to the upside. Now today, if we just track this high just sitting in here at the 39.31 level, we've got a little bit of indecision kicking in, and it's surprising to see that, because you would have thought there would have been a very significant, because we've got some sort of positive news for equities. We would have assumed the equity markets would have pushed further to the upside. So the S&P 500 would have pushed higher, the Nasdaq would have pushed higher, Dow Jones, which actually did push higher for a little bit. We can put the all-time highs just up at these levels now, and it's just rolling back over to the downside. Where are we at with the FTSE, which we'd expect to eventually move a little bit higher. We're getting close to that. In fact, we've pushed to the upside, and now we've pulled back slightly. So the FTSE 100, the DAX, really strong. We gapped to the upside and then reversed back lower, and the Nikkei is just having a little bit of a pause. We can work with these new highs, and we'll just see it's struggling to actually close to the downside. So there is a significant bid in this trade. So broadly speaking, you would assume from the fact that Jerome Powell is actually so dovish these markets, and really wanting to continue that accommodation with forward guidance, you would have expected to have a little bit more of a positive impact on these equity markets, and that's clearly has not been the case just yet anyway, and that very well may change. Okay, so that's just touching upon just what's going on in the bigger picture view. What does that mean for the dollar? We're entering sort of risky territory with this sort of increasing yield backdrop in the bond markets, and an appreciating euro, which is not great for the ECB. It's not really what they're looking to achieve. A stronger euro. The ECB wanted to play down the 120, and you can see consistently we're really struggling to close below the 120. So we continue to push higher, and that's not really what the ECB want to see in this current environment. So it is all to play for. We've got let's say a mildly weak dollar against most of these markets. So like the CAD has had a really good flush to the downside. The Aussie, really positive move to the upside, and same situation for the New Zealand dollar. And again, these are not great for the New Zealand economy. It's not great for the Aussie. Obviously, if your currency becomes a lot more expensive, then it does impact your the price at which you pay for goods and services. So your imports will become a little bit cheaper, but your exports will become a lot more expensive. So it will impact your ability to export, and a lot of these commodity related economies are really all about exporting a whole variety of different products and services. So they do get impacted if their currency appreciates considerably. So we could be getting into the territory where this becomes a bit of a concern now for some of these currencies. So with this in mind, let's go. We'll just have a quick review over last night's trade plan webinar. So this is where we identify the opportunities that we're looking to get into. Last night we were looking to get into this market above the 2190. We've had quite a nice move to the upside. We've extended quite nicely, so we'll come back to this in a second. I'll just move that out the way. So we're looking to we'll look at the 122.37 and we'll see if an opportunity exists there. So we'll have a look at the euro dollar. We're looking for buying opportunities above 121.90, and we're quite nicely above that level as things stand. The dollar CAD, should I say, below the 12500. So we're nicely below that. This has taken a bit of a. The Canadian dollar is obviously correlated with markets like the crude oil, and we are at significant momentum highs as things currently stands, and expect further upside. So we've preferred to get into the CAD trade against the dollar because the dollar's been so weak against some of these currencies. So we'll have a look at the dollar CAD. The euro yen is next. So our trade from last night was above the daily high, the 128.85, and now we're 100 pips higher. So a really good trade to the upside in the euro yen. So we'll have a look at that. Nasdaq is next, although this is rolling over to the downside. So we did like this market above these highs in here, and we've failed to kind of close above that. So we only just grazed the 13,349 and then reversed to the downside. So this really doesn't become a tradable option now until the 13,360 level. So no joy there regarding the Nasdaq. And then the FTSE market was the final market. So out of those 5 trades, we've certainly had 4 markets to take a close look at. Currently we are in the right. We've just taken profit, I believe, in the dollar Swiss trade. So we've got a bit of indecision. We've got a bit of up and down type of price action in this market now. We've had a really good trade on this to the upside, and I think we've booked in 3 or 4% now on that trade. So a good profitable trade for us there for the dollar Swiss. The other market we're in is this trade here to the upside. So we do want to break this 106.22 level, this level just up here, and we're struggling to do so just yet. And the importance of that level is as follows. So this is this high up here. So we want these markets to break this level. At that point, this then becomes a structural failure trade again to the upside, where we'll start seeing a new momentum high. So we're in this little sort of uptrend bit of price action, and a break above this level becomes a new momentum high. And what we'll see in that case is a series of higher highs, followed by a series of, when this market makes a high, it'll come back and it'll test the level, and you'll have this type of price action. So this is the definition of an uptrend, and what we want to try and do is sort of buy the lows when we get those opportunities. There's opportunities to obviously sell the pullback, but we very rarely look to take those to any great extent. So we're looking for the buying opportunities in a market that's trending to the upside. So what you'll experience from us is hopefully a high degree of kind of common sense trading. So we don't sell the highs, we don't buy the lows. the outright lows. So we don't want to catch a falling knife. So there'll be loads of traders that will be looking to buy these lows as the market falls lower, maybe even doubling down as the price pushes lower. That's a completely different approach to what we look to do. We look to trade trend. We look to be very efficient with our risk management. We want to mitigate risk as soon as we can in a trade. We want to then focus exclusively on generating consistent returns and looking, really importantly, looking to let those winners run when we get those opportunities. And the markets are beginning to open up nicely now. So let's see how we get on with these opportunities. So the dollar yen, we do want this market to break above the 106.22 level. We're really quite close. We're sort of 8-9 pips away from that move to the downside, to the upside, should I say. So, okay, let's get these markets up. We've got the close now in about 25 minutes. So let's prepare. Let's see what opportunities we can work with. So we've done our analysis on the daily time frame. We've done it well in advance of the actual moves occurring. We've had a really strong explosive move. So now what do we do at this price? Is it tradable? We can have a look at the smaller time frames. So on the hourly, we can see we've just had a pre-European move to the upside and a continuation during the European Open. And we're up at these highs as things currently stand. So so broadly speaking, now we'd want to get in on the pullback because we've extended to such a level, and it very well may continue pushing higher. We just want to wait for the opportunity to pull back, and then that will give us a high probability trade to the upside. What level? It seems like quite a long way away now, but actually back to the 2190 level. We look for these levels of support and resistance when we trade. The market interacts and behaves with these levels so often, and we can identify these levels very easily. The market's clearly moving to the upside, so we're looking for buying opportunities. So if this market sells off, we're not interested in the sell, the short-term sell trade. Excuse me. We're not really interested in the short-term sell trade, but we would be interested in the buy trade. And there's a couple of options to really look for the buy trade. The straightforward one is if we just reverse back in and around this kind of zone here, and we have some consolidation kick in, and we look to take the next leg to the upside, because this is how markets move. They move in that fashion. They don't, you don't get a linear move from top to bottom, although we've seen a small extended move here. So we're talking about 30, close to a 40 pip, rally to the upside, which is great. But so that's the first option. If it comes back to previous levels of resistance, which then becomes support. The other alternative, if the market pulls back, and then what we often find is a floor gets created in these markets, and then you get the next leg to the upside. So it's one or the other. It's just to clarify, at these highs, we don't want to actually buy an out and out high in this situation, and it's not so much about this one trade. It's about our approach to these markets consistently. And that's really what trading's all about. So if we have to take this momentum high this time, we'd have to do it each and every time. We want to see this pullback, so that's our plan. So to look to get in on a pullback as far as the euro dollar is concerned. The next trade then is the dollar CAD to the downside. So we can see on the daily time frame, we've had a really nice move to the downside. We're trading this on the daily time frames. For those of you who perhaps don't know, we also trade capital over the medium and longer term. So we trade daily time frames every evening at 9:45 for about 15-20 minutes, where we do most of our trading decision making is done during that 15-20 minute session. The dollar CAD sell trade is one of those daily time frames, and actually we're performing marginally better in our capital growth trades at the moment, because they're not so close to the current erratic sort of wild swings. and we're performing quite nicely on that. And some of our intraday stuff is slow to catch up. And normally that's the other way around. Normally, you would be a lot more successful on the day trading side, and the capital growth would be a little bit sort of slower in terms of returns. But actually, it's proven recently to be the other way around. But that's just to do with sort of market volatility and the way that these markets have been sort of moving recently. So the dollar CAD to the downside. We can see on the daily time frame the momentum's further lower. So let's have a look at it firstly on the hourly. So we've just got a really strong swing to the downside. We're down at these lows. So actually a similar situation to the euro dollar. We do have a level of support and resistance actually in this trade. So we'll be keeping an eye on that. So this is a momentum low. Markets have eventually broke to the downside through that level. So really the 2502 or the 2500, if we get that little pullback trade, could be the level at which we want to get into the downside. So it's back to the previous daily low, is what we'd want to see if we're going to see if we can get this price pushing lower one more time. Again, we don't necessarily want to get into the momentum low, although it's creating a bit of a floor actually in this trade. So actually looking at this now, it's the 2470 is, we've got a bit of a floor in this trade. So that could give us an entry price with, probably close to like a 30 or 40 pip stop loss in it. So let's look at the breakout trade actually in the dollar CAD. The momentum's lower, and we do have the difference. The main difference really is we have this period of consolidation now in the dollar CAD. So we'll see if that opportunity presents itself. The euro yen next, and I'll put these all up on screen now in just a moment. The euro yen, the 128.85. So this is above yesterday's high. So we've had a really strong explosive move to the upside. Let's see what it looks like on the daily time frame. Again, like the euro dollar, just a really strong momentum move. We don't necessarily want to get in now at these all-time highs. Sorry, not all-time highs, these momentum highs. We're going to just wait for that pullback to see if it gives us an opportunity. Unfortunately, the next pullback level is way back here, the 129.100. So we're a good 80 pips away. But if it pulls back and creates a bit of a floor, we're getting a lot of yen selling at the moment. So it's a really good trade to the upside. We just need to look to capitalize in some sort of pullback in that trade. The Nasdaq, it's continuing to squeeze lower, so we'll take that off our list for now, and we'll just see the FTSE. Yeah, it's really struggling, isn't it? So these indice markets look like they're going to be under a little bit more pressure, and what that can support actually is some opportunities in the US dollar. So again, it kind of supports the euro dollar trade and the dollar CAD trade to the downside. So let's prepare these markets. We can stick the euro dollar just in here. We've also got, so the dollar CAD is quite a big. So we're looking for the breakout trade to the downside below the 124.70. We want to get some sort of constructive pullback in the euro dollar. Again, these are for high probability trades. So we wouldn't for a second suggest that this market can't be continuing higher. It absolutely can, because it has done for the last 7 or 8 hours, and it's continuing that move to the upside. So the dollar. So next one is the euro yen. We'll bring this over here. And we are in the euro yen, the euro dollar, the euro yen to the upside on the daily time frames. We've had some nice moves in these since last night's webinar. The dollar CAD, we're looking for that breakout trade below the 24.70. We do want to get something constructive to work with regarding the euro dollar and the euro yen. The Nasdaq, what I'll do is I'll just bring up the FTSE market. So we've got the euro yen. So let's bring up the FTSE market, because this might be a little bit nearer to a potential high probability trading opportunity, although we are seeing this sort of bearish market condition for these equity markets today. That very well may change tomorrow, but for today we'll put the Nasdaq up. So let's stick the Nasdaq just the bottom right hand corner. You can see it's quite bearish, and I don't really want that's what we want. So again, just watching the S&P, this is creating a risk-off market condition. So for us, it's likely to support the dollar. So that breakout trade, it's likely to support the dollar weakness trade, which is the CAD strength and the euro strength. So right trades, the timing is a bit of an issue now for some of these markets, just purely because we've had a nice little move to the upside already. So what I'll do is I'll just put a little bit of text just in here so that you can so we're waiting for a pullback buy trade. Now we're looking, nearly 200 pips higher, 250 pips higher, really, from what we were talking about a few days ago. So really strong moves in some of these markets. So same as the euro dollar, we're waiting for something constructive on the euro yen side. So slightly different for the dollar CAD. There's a viable opportunity to get in on a breakout trade to the downside. We've been drifting sideways now for a good few hours, and now we potentially have this a bit of a ceiling created now, and would expect these markets to actually continue further to the downside. So let me just put a text box in here. So the level is the 124.70. 124.94. Okay, 124.94. It's just, it would be safer a little bit higher than that. Breakout sell trade below 24.70 with stop loss 24.94, and we'll just put a nice red color onto this just to show we're looking for prices to be pushing lower. Okay. You see, you'd have to expect a little bit of short-term weakness creeping into these indices markets. So we did have quite high hopes actually for prices to push higher. We're not sort of getting that kind of follow-through trade. Let's see what it looks like on the hourly time frame. So what we can do is we can identify this range. So this is really over a significant period of time. So we have, you know, have a bit of a floor being created. So if we do break above the 66.92, we have a stop loss, a really strong technical stop loss actually below the 66.52. And we can see continuation to the upside from that level. There seems to be a bit of a, after the Asian session, which was quite volatile, there seems to be sort of an air of flatness in this market, but we are sort of 8 minutes away from the cash open in the US, so we'll likely to see a little bit of an injection of capital probably, and let's see. So the FTSE, we still like this market above the 66.92, so let's put that little note onto this trade. So we're looking for a breakout buy trade above 66.92 with stop loss below 66.52. And we just change it to green just to show you that we are looking for this market to push to the upside, believe it or not. So let's see how we get on with that trade. Okay, so the other two trades are really going in the opposite direction to the direction in which we would like them to go, which is both to the upside, but we're not getting that move. Will we get that sort of turnaround bit of price action, you know, soon? We very well may do. There might be some turnaround, and that wouldn't be necessarily a bad thing, because the sellers are really trying to capitalize on these markets and try to think about this market as a battleground between buyers and sellers. That's what these markets are, and what you want to do is, if you can work out who's in control of each market, then you can trade it accordingly with a high degree of confidence and understanding about what's happening. And this is where you see, there's a lot of traders out there that are just purely technical. There's a lot of traders that are just purely fundamental. There's a lot of traders out there that do scan the media for sentiment-based opportunities. We actually look to include all three forms of analysis. with our decision making. So we want to have as much confidence in our trading decision making as we possibly can. And for that, we want to know, the euro is strengthening versus the dollar. That's quite useful information. We want to know some of the correlations with the equity markets. Are we risk on? Are we risk off? Where are we likely to get the best bang for our buck in terms of explosive moves? All of these things start to formulate when you get a little bit of experience under your belt, and that's really what we teach people at the live trade room, is to basically make decisions for yourself, not to be told, buy this, sell that, get in at this level, get in at that level. We want to try and, through, I suppose, being as consistent as we possibly can, give you a strong grounding. Over the live trade room, we've got a wealth of education for traders, which just breaks down all the important information that you need in a nice sort of factual, concise manner. And we have daily live trade rooms as well, so you get to sort of join us and have that level of support, which most traders, they don't really get, even though you could spend an awful lot of money on tuition and courses and things like that, and not necessarily be able to apply it practically in a trading room. And as you can see, we want to try and simplify what trading is and not overcomplicate things. We could have a large number of indicators right now to tell us that the euro is strengthening against the dollar, and we're at a swing high, and what other information? We're well above a moving average. We can have indicators that tell us that, but we can really see and gain all that information just purely from understanding what price is doing. And that's really what trading is. It's having a trading bias. It's understanding why these markets are moving the way that they are. And sometimes that's not easy. Sometimes markets could fly and you have a big question mark over why is that market going in the way that it's going. Now, often something comes out in the wash further down the line, but sometimes these markets, they don't need to make sense. There's a really interesting saying in trading circles, is that the markets can remain illogical far longer than you or I can remain solvent. So they don't need to operate in a logical fashion. What you want to try and do is to garner as much confidence in your decision making as possible. And if you're new to trading, turn down your risk exposure until you're at a level where you're more comfortable and you've got a little bit more knowledge, and then you can start taking on more risk, and and then the rewards start to increase as a result. And this is what we teach traders every day at the live trade room. So do feel free to go to our website and you can speak to one of our traders there if you need to. Okay, so just looking at these markets, we do have the potential for the euro dollar to just sell off a little bit. The euro yen, maybe we've achieved these highs, and we'll see a bit of a rollover. We'll have to wait and see, but we're a little bit away from maybe even getting into a euro yen trade or a euro dollar trade. The market that's much closer to a potential sell is the dollar CAD. We have oil prices pushing higher. I'm sorry, I do have like a feed, which I'll give you some updates in just a moment as well. As things develop. We don't really have a huge amount of news events to have to track and monitor today. So these equity markets are really looking a little bit bearish, which means there's potential opportunities. Let's look at the S&P. It's worth looking at. So none of these levels are really close to the FTSE. It's squeezing down to these lower levels, and we want it to be breaking above the 66.92. So really, you're talking about sort of 40-point stop loss really on the FTSE 100. But let's have a look at the S&P. So this is the big one in the US. We have all-time highs just here. We've all this market was is just a straightforward pullback, nothing more complicated than that. Yesterday we had a strong bullish price action, and now today we've got that little rollover price action. So let me show you what it looks like on a daily time frame. Sorry, an hourly time frame. So it's not the cleanest of charts. Just doing a little bit of analysis. We had this market in this little sort of mini downtrend. Yesterday we saw the little breakout trade to the upside above that 3900. That was the level that was really quite interesting to us yesterday. We did get a nice move up to the 3940, something like that, so a 40-point move. And now if we just scrutinize this price action more recently, we're clearly getting a pullback. But technically it is a structural failure trade. So what that means is the markets have made a high, we've bounced off it, we've attempted to make a new high but fail, and then you get this market just rolling back over to the downside and potentially even lower. So so this is your sell trade around that sort of price here for those 39.25. What you would have is a nice sort of 39. So this would be our stop loss just up at this level, our entry, and you could probably get a little bit more of a leg to the downside. But we've actually been planning to look for some buying opportunities rather than some selling. So at what price would this level become interesting to us? It would be exactly in and around this 3900. If prices come back down to that level, and we see what's referred to as a bit of a turnaround, bit of price action around the 3900, then that absolutely. So what we'd want to see is this market continue to the downside. We want to see a low being created. We want to see this market attempt to make that push higher and fail, so we create a higher low, and then we want the structural failure to the upside. So we might have to be quite patient with this trade from here, but it's the opposite of what we've seen here. There's your sell trade. This is potentially your buy trade around here. So that's what we'd like to see. It would certainly be in keeping with a lot of the other price action that we've seen to the upside and to the downside. Clarity's not great though. The fundamentals are a bit skewed. We had a very dovish Fed chair yesterday and the day before, and that would be normally quite explosive to the upside, but we're seeing a bit of negative price action now over the course of today. And what we have in the back of our minds now is, do we have sort of positive news for these markets and negative price action? That's going to be, is this market like, what's the true direction of this market? Is it actually fundamentally to the upside? Or, we've heard an awful lot about these markets being quite frothy, and I'm just conscious of that open, the open 4 minutes ago. So we will have a quick look at those trades while I'm talking. So these are our trades, our four main trades really, and just in writing there is exactly what we can expect, or what we're looking to do really with the trades. So just in those little four boxes. The equity markets is kind of a standalone issue at the moment. Hello James. Yeah, delighted you could join us finally. So you're here on your lunch break. Very good. Yeah, listen, look, just delighted to be able to help really. We've been you know, it was our intention to go live with these webinars, you know, probably this time last year actually, but with COVID and everything like that, it just became a bit too difficult. But you know, we're getting there eventually. But I suppose COVID's been a nightmare for everybody, really. So it's one of those things. But delighted you can join us, and you know, I'm sure we'll see you here again as well. Good. So you're just listening on your phone. Brilliant. Are you in any trades at the moment, James? Let us know if you can. So really, it's one of the pillars that we're strong advocates of when we trade is patience, and the reason being is we want the markets to perform as per our expectations, and for that to be the case, like with the euro, for example, because we've seen accelerated moves to the upside, we want this market now to perform a bit of a pullback, and if so, we can get into it. If it continues to push higher, then we want to get into that pullback when and if the time is right, and that's what requires patience. A lot of traders will just go chasing markets. They'll just get into this, you know, euro dollar trade to the upside, and you know, they'll expect continuation, and the markets will roll back over to the downside, and ultimately they'll kind of wonder why that's the case. So yeah, it's really about being consistent in your decision making, being disciplined with your capital, and of course being patient as well. You know, these are things that we think are really quite important, to understand what you're trading, why you're trading it, and have an understanding about where you should be looking to get in from a probability perspective, and where you'd be looking to manage that risk from a consistency and a discipline perspective with regards to your own capital, and then just that patience side of thing, which is quite difficult, and especially in these market conditions where we could be moving sideways for quite some time, and then we'll see a fairly brief, you know, explosive move, which is, we were talking this week about, you know, now we can start to use pending orders and start placing those orders. We refrained from doing so for the last number of months, just due to the market conditions and the strange vibe we were getting from these markets, the lack of clarity we were getting. There's a lot of normally correlated markets which were unwinding, and we had a few question marks over most of our trades, and that's obviously not a great place to be, but it is how these markets perform. So look, we can, this dollar CAD trade is getting quite close. We're sort of 5 pips away from potentially getting into that trade, and we've got about 20 minutes left in the broadcast, so hopefully we'll get that next leg to the upside. And to just expand, like, can you see the difference between the euro dollar and the dollar CAD? So they're both dollar weakness trades, but they're in different positions. They're, you know, we've been consolidating for quite some time in the dollar CAD, which means we've created a bit of a ceiling in this market. So when prices break below, it'll provide some resistance if prices start to reverse, and that's really what we're talking about here: support and resistance. Whereas if prices continue higher in the euro dollar, we don't really have a floor in which to make that same decision. So I hope that makes sense there. Okay, fantastic. Yeah, brilliant, James. You got into that euro dollar trade and the euro yen, 2 fantastic trades there. Did you get into them last night, James? Did you? You're probably in good profit on those trades, are you? Yeah, 2 great trades, so well done on those. Like ultimately, we'd expect short-term upside in the euro dollar and the euro yen. We do have a bit of a question mark actually over the ECB and the euro. They really do not like the euro to be strengthening like this in the midst of increasing yield environment and potentially increasing inflation. So that's a tough environment, especially if you have a strengthening euro for the ECB. So what some of these central banks can do is they can intervene. They can push prices, a bit of market manipulation. They say they don't, but they do, of course. There's this race to the bottom as far as currency valuations have been concerned over the last 12, 13 years. So if you devalue your currency, it really does help export-led economies, because your products and services are cheaper, you see. So as a result, there's huge benefits to be gained from that. So we're close to that little breakout level for the dollar CAD. If not, we can absolutely place a pending order below that 124.70. We'd expect further downside in that trade. Yeah, some great trades there then in the euro dollar and the euro yen to the upside. The dollar CAD is just drifting in this sort of sideways fashion, so it's what it does is and if we look at this price action here, and prices are moving from top left to bottom right, so we're clearly in a bit of a trend to the downside, and you could look at this on bigger time frames as well, but your decision making is always relevant to the time frames that you're looking at. So we can make decisions on a 15-minute time frame that's relevant to the 15-minute time frame, and we're clearly in a downward trend. Prices are moving from 125.80 down to 124.80. So we know what we're looking to do in this trade, and that's to sell. So it discounts any buying opportunities. It actually discounts our ability to do nothing as well, which is so at any given time when you hit a trading chart, you can buy, sell, or do nothing. And that's actively doing nothing, by the way. It's not sort of absently doing nothing where you're just not trading or you're too scared or whatever the case may be. You know, we're currently doing nothing at the moment because there's no active decision to be made. So it's only when prices get below that level do we become active. So for the reversal trader looking to benefit from all of these sellers to get out of this trade, then there's buying opportunities above the 124.94. But right now we're actively doing nothing, if that makes sense. So that can be triggered if prices break below that 24.70 level. So the fact that we're looking for selling opportunities, it means we're not looking for buying opportunities. We can discount those. So if these prices do push higher, that's not the trade that we're looking to get into. So we can almost go back to that drawing board, so to speak. So we are looking for that breakout sell trade. That's very important. Breakout sell trade below the 124.70 with a stop loss above the 124.94. So a 24 pip stop loss on this high probability trade. James, are you in good profit? I don't know if you're still with us or not. Are you still in good profit on those euro dollar and euro yen trade? Okay. So what I might do is just put so I might just do a couple of drawings. So if this market can push back to the downside and give us that opportunity in and around that strong level to take this market to the upside, that's what we're looking for. Same situation back down to these levels of support before you get that next opportunity to the upside, because that's the nature in which all these markets move. They move up and they move back, and so you need to build in that that pullback aspect to each trade. So what we'd want is this market here to actually just break out above that 66.92, and then we'll get that next move to the upside for the FTSE market. And then if I change the color, so we can move up and down as you want, like this, and it's when the market breaks through this level and we get the confirmation that we want, we'd expect further downside. So this is our thinking. This is what we're wanting to wait for. That will give us the best opportunity for the greater returns when we trade these financial markets. So that's what we're looking to see happen. And now it's just handing over to, I suppose, being patient and trying to wait for those opportunities, especially those of you that missed the breakout trade to the upside. So if you missed the breakout trade to the upside, you have to wait for the pullback now. And it looks like we could be getting a bit of a squeeze to the downside for the euro. So I'll leave this up on screen. Okay, so that's what we're looking for. It looks like we're just going to need to be a little bit patient with these trades. So for that reason, we might perhaps even take a little bit of a break now at this stage. The euro still needs to work quite hard to get that price rolling over to the downside. The CAD, we could get quite an explosive move at any second. Doesn't seem to be a huge amount happening as we're sort of 20-30 minutes into the US Open. The equity markets are continuing to just grind lower, really. That's probably the phrase that needs to be used. So we're just grinding lower. So we're in this risk-off market condition, which will actually support our euro-dollar trade and the dollar CAD trade to the downside. So so the extra the additional sort of scribbles and drawings on the screen just give you an idea for what we're looking to get involved with. We've got consolidation in the dollar CAD, and we've got breakout trades in the FTSE and pullback trades in the euro yen, euro dollar, and that's generally the large range of trades that we look for. We look for breakout trades, pullback trades, and we look for long periods of consolidation. Those are what gives us those little fantastic little breakout trades to the upside. So listen, on that note then, I'll let you guys go for the afternoon. We've got our trade plan. We know exactly what we're doing. And what we try to avoid is getting distracted with other trades in other markets and be jumping from this trade to that trade. So for the rest of the trading day, we'll look for opportunities in these markets. And if we don't get those opportunities, we are quite comfortable sitting on our hands and not go chasing these markets. Also, Finbar, your short gold on the 15-minute time frame, yeah, looks like a decent opportunity there. So, yeah, very good trade. So, the technicals, as we've been talking about, as you know, over the last few weeks, our bias is absolutely to the downside. Largely driven by the technicals. So we peaked at this level. So we peaked at these highs. We reversed back to the downside. We pulled back, and then we drifted sideways for quite some time, creating a couple of structural failures to the downside. Then you get your pullback. Then you get the next leg, and now we're in this little pullback range in here. That's the next opportunity, like Finbar was getting into. I'm not sure what sort of price you got into this trade, but it's very much in keeping with the analysis of this market likely to push further to the downside, and that's what we're seeing today. Yesterday's price action unfortunately put a really strong question mark over the viability of the trade, but we've seen a few of these moves in a few of these markets. The other one, look at yesterday's price action, a really strong move lower followed by a really strong rejection in gold. Same situation if we look at the dollar Swiss, and we look at the 3-day candlestick. We drove this market to the upside, followed by a strong reversal, and then what happened? The markets opened the following day, and we continued to drive these markets to the upside. So these little shakeout moves, we're seeing an awful lot of them at the moment. So almost build them into your approach, really, which is quite difficult to do, but clearly defined little downtrend, and we'd expect further downside. In fact, there's an opportunity here now below the 72.82 to the downside. I don't want to burst the bubble, but from a correlation perspective, when you have capital coming out of the equity markets, you'd expect it to go into the safe havens like the gold. So it's a bit of a counterintuitive move. Technically, absolutely fine. From a fundamental perspective, a little question mark over it, or it's but look, you're trading it absolutely brilliantly. So your 1790 trade was your entry, and your take profit is the 1767. Yeah, down at these lows down here. So if I just track this low, so you're exiting just before this low down here. Again, absolutely fine. It's you'd expect further continuation to the downside from there. So hopefully that's another great trade for you there, Finbar. So very well done on that one. Good stuff. So listen, on that note, it looks like we're beginning to get that little bit of pullback that we're talking about in the euro. We'll have to wait and see. The CAD's doing nothing. Gold is attempting its move. We've got this risk-off market condition. So, sorry, that's the dollar Swiss. So we've got the equity markets continuing to push lower, and there's nothing in the FTSE either, I don't believe. So we want this market to break above the 66.92. So we're unfortunately one of these trading sessions where we can go chasing, or we can actually practice what we preach and be a little bit patient, but actually lay in wait for these markets. So if we do get a pullback, it'll be a no-brainer sort of buy trade around the 2190, 2200. It'd be quite straightforward and very easy to identify where your technical stop loss can be placed. Same for the euro yen. So you just want a corrective move, or you want very least a floor to be created, whether it's a ceiling or a floor, depending on what direction the market's moving in. So I'll leave you with these currently up on screen. Unfortunately, we do have to end the broadcast now, but look, from everyone here at the live trade room, thanks for joining us. Those of you that were able to join us, please do give us a thumbs up if you've benefited from the broadcast. Not that active in terms of trading this afternoon, but it was a good chat about these markets, and some of you are in some really good trades, so very well done on those. And yeah, we've got our live trade plan webinar this evening. Yeah, so they're intraday trades, absolutely. So yeah, you might get that momentum move there, Finbar, on the gold trade. You would expect it to continue further to the downside, and you've got your stop loss just above that level of support. Patty, my pleasure. Good to have you with us. And we've got some interesting developments now next week as well. So there's been things that we've been working on in the background as well. So for more information about some of the products and services we offer, feel free to go to our website, www.thelivetraderoom.com, and do feel free to contact us through our website. Will you take profit tonight or leave run? Right, so that type of decision making needs to be determined at the point of entry. So what we often do is we very rarely have take profits, because and I understand why you did, because this is a strong level of support, and you generally want to book in profit at strong levels of support. So because you've decided to have a take profit, what you want to avoid doing is moving take profits, just purely because you've decided on a specific point or level or price point, and if you move that, of course, what will happen? It will hit your original level, and it may fail to hit your new take profit. So avoid changing, and it's really whatever decisions you make at the point of entry as well. That's always important. Will determine. So for us, what we often do most of the time is, we do use take profits at certain times, but what we do is we have reasons to get into a trade, and then we have technical reasons to get out of that trade. So we want to see exhaustion, we want to see reversals, and we want to see price action that allows us to get in and out of those opportunities. Yeah. Yeah, so basically leave them run then, Finbar. So if we get into like the dollar CAD trade, then we very well may be talking about it in a lot more detail tomorrow. So I suppose we're not exclusively day trading. We will get into a trade, and as long as it's making us a return, we'll look to stay in it. And if that's 1, 2, 3 days, it doesn't really matter. It is about sort of maximizing the return. So look to leave it run probably, unless it hits your take profit. But look, we'll be meeting again tonight, guys. So we can discuss it in a little bit more detail then and see if we get those opportunities. So it looks like the euro dollar is just beginning that little rotation move, or softening a little bit. So look, on that note, I'll let you guys go. Thank you as always for joining us. Do take care. Now tomorrow's Friday, unfortunately for the time being, largely due to COVID, we're unable really to I can leave that up there so you can have a look at it for a few more minutes. We're unable to broadcast on a Friday, but hopefully that will change now in the coming weeks, and we can be sort of 5 days a week trading live every day. So so I shall let you go. That's our trade plan currently up on screen, and we wish you well. So from everyone here at the live trade room, have a great evening and afternoon, whatever's left of it, and enjoy your weekend, your lockdown weekend, and we'll be back again Monday to Thursday next week with some more live trading. So from everyone here, take care, and we'll speak to you soon. Bye for now.